Good morning, good afternoon, good evening, everyone, and welcome to the first Discover Greif webinar of 2021. Due to the situation on raw material, we decided to make this first webinar as a conversation on raw materials for global industrial packaging. So let me first introduce your presenters for this call. So Francesco Caforio is our VP of Global Sourcing and Supply Chain. Francesco has joined the company in 2012, and he has a long experience, 30 years of experience in sourcing and supply chain for commodities. Christina Zeitz also joined the company in 2012. She has more than 20 years experience in steel trading, and so she will be the one, let's say, telling us about the steel market today. Gianluca Valente joined the company 2 years ago. He's now in charge of the global sourcing of several chemicals, let's say, used for global industrial packaging. And his focus will be today to talk about the resin. And I will be your presenter. I'm in charge of global commercial excellence at Greif Industrial Packaging. On top of our presenters, we have also some business leaders representing Americas, EMEA, as well as Asia. And in case you have some specific question, they also will be able to answer. Before we enter in the webinar itself, I remember everyone that you can raise question by using the chat button. We will take all the questions at the end of the presentation, so you can feel free to ask and raise any question at any moment. We will answer them at the end of the presentation. If we don't have time to answer all of them, we will address them separately after the call with your usual sales contact. So the table of content today is a focus on steel and resin. I think that all of you knows very well, or at least the tension that we have on those markets. So we have decided to focus on those two key raw materials for our steel drum, plastic drum, and IBCs. But if you have questions on other topics related to raw material, we will do our best also to address them. We will provide for each of those raw material a market overview, of course, giving you, let's say, a good flavor of the current situation and what is happening from a supply perspective as well as a pricing perspective. And we will also try to give you the best possible outlook for 2021. So this topic, as I said, is, let's say, very hot at the moment. You can find many headlines around the world, many articles talking about let's say the tense situation specifically on the steel business. We'll be very happy also to share some of those articles if you are interested, as they might also help you to understand better the situation. So Francesco, I give you the floor to give us an update on the global 2021 outlook. Francesco, you're on mute, Francesco.
Thank you. Thanks, Philippe. Just some words before starting discussing situation on steel market and resin market. Let me start from some months ago. In July 2020, I remember I had some webinars with peers, and the point on which all agreed was that the restart of the economy will be fast creating issue on the end-to-end supply chain. Everyone agreed on it. The question really was when that will happen. It's evident today that the difficult situation we are living is not really due to an overwhelming of the consumption, but it's mostly due to a forecast volatility in all sectors generating supply chain issue. This situation is impacting transversally the commodity, the product, the components. I would say, just not to stay with our material, but semiconductors are really in this situation today. Or speaking about our product, is the closing rings, the gaskets, and strongly impacted the logistic, the carriers, the shipping, the containers. Give you some example today. The car producer are obliged to stop production for 2 weeks due to the lack of semiconductors. White goods, which have been historically historically product in stock, request today 8 weeks to be delivered. I would say very, I would say unusual situation. It's clear that the region more impacted are North America and EMEA, while China lives in a more comfortable situation. But now, coming back shortly to steel, just some key points. Steel has one of the most complex supply chain. Iron ore, that is the most important raw material for producing steel, is largely produced in the center of Amazonia. Coking coal comes mostly from China. All the components come from around the world, if we speak about nickel or manganese or other products. What I mean with that, the production and delivery has a very long lead time, requesting buffering in each step with a lot of variables that are not manageable, imposing to the steel user forecasting consumption 6 months earlier. That is really important to understand the situation. Speaking about Greif, I have to say that our partnership relation with our key supplier has been, to our global footprint, has been very helpful, and in the end, permitting to us to go through this difficult period. I would say, ever with a lot of daily work from sourcing a supply chain team, from Cristina, from Gianluca, from the overall GSSC team to solve the issue. Anyway, we have to accept that the supplier have done significant effort to give us the volumes, but this has clearly not been enough, obliging us looking for material on spot market, a very significant higher price. Moving to the 2021, it's clear that the global output expect for the 2021 is expected to reach a new peak. Nevertheless, recovery timeline will be different between the region, meaning that in Europe, the full recovery is expected more in 2022, 2023. In US, it has already partially recovered. The worst downtown, I would say, after the depression, Great Depression. Nevertheless, 2021 will depend on the government stimulus and to the vaccines progress. While China mainland has already fully recovered from pandemic period, I would say. Concerning 2021, we expect cost increase will continue to be pushed downstream in the supply chain for the next 6 months, pressuring margin and leading to higher price for finished goods. Thank you. Cristina.
Okay, so let's start with a brief look at steel. I will give you just a brief introduction into steel production, market, supply, demand, raw materials, and pricing. As Philippe said, if you have any questions, you might leave them in the chat. We will come back to them after the presentations, or if there's not enough time after the webinar. So steel production, basically there are 2 possible routes for the steel production, blast furnaces or electric arc furnaces. For packaging, we use flat steel products that is mainly produced out of blast furnaces. So for example, in Europe, 60% of the steel mills are blast furnaces, 40 electric arc furnaces, but for flat products, it's at least 90% out of blast furnaces. Blast furnaces use iron ore, coal, and scrap. Electric arc furnaces mainly scrap collected from recycling. But these electric arc furnaces are suitable mainly for the production of long products. And besides, there's also not enough scrap available to feed more electric arc furnaces. All steel is, of course, 100% recycled, but lifetime of steel is long, so you can only recycle what is available and reuse it. For virgin steel and blast furnaces, the main raw material is iron ore. And the production of iron ore is concentrated in 4 countries of the world: Brazil, Australia, China, and India. It's an oligopoly, so there are only 3 mining companies that dominate the market. They have more than 75% market share. It's 1 in Brazil, Vale, and 2 in Australia, BHP and Rio Tinto. The route to produce steel, everyone really needs to know in this call, is long. So the raw materials have to be shipped from these few origins to the steel mills. You have to ship the other raw materials that are also not produced in too many locations. You produce first slabs, then you produce hot rolled, then you produce cold rolled. We get the cold rolled to produce then the steel drums. The total lead time from ordering raw materials up to the delivery of the finished steel product easily can take up to 6 months. So you need to know as a steel mill now what you want to produce in half a year from now. If we move to the next page, the steel markets. Steel is used everywhere in our life. The global steel consumption is 1.7, 1.8 million tons a year. Packaging has a very small share of it. It's less than 0.5%. We have been trying to calculate this morning. 0.2% maybe is a realistic number. The largest steel consumer is building and infrastructure with 52% in 2019, and automotive is the second largest. Globally, it's 12%. But of course, it varies region by region. In Europe, for example, Germany and Italy are very much dependent on automotive, and it has also 12% of total steel consumption, but it has a far higher share of flat products only. The top steel producers, yesterday the numbers of 2020 were published. 1.836 million tons is what was produced in 2020. The largest steel producer is ArcelorMittal with almost 100 million tons. Second largest is Baowu in China, 95 million tons after they merged last year with Manchan, so quite similar. Then number 3, Nippon in Japan, has only 51 million tons, and number 10 you see is only 30 million tons. But altogether, they have quite a big share, these 10 producers. So you do not have a wide selection of producers that you can use. 50%, more than 50% is today produced in China, produced and also consumed in China. In Europe, we produce 8.5% and 9% is the consumption. North America, 6.4% versus a consumption of 7.6%. So both are net importers of steel, which is important today because imports are hardly available and very difficult. They're difficult to get and difficult to get logistically. So why do we have a shortage today? Let's look at the primary drivers of the steel costs and demand and supply on the next page, please. Thank you. So everyone knows in spring we had many lockdowns in response to the pandemic, and the steel consumption has dropped a lot. If you look, for example, at Europe, the automotive demand was completely closed for some weeks. And if you look at a little wider range from April to July, it was down 50% of the production. In the US, 60% between March and June as an average. Some months between 89%, some 20, 50. That has, of course, a very big impact. And the producers had to take out their blast furnaces to a minimum due to the lack of sales. You cannot produce hot iron steel and continue producing if you're not selling. The economy started to recover sometime in summer, and the mills have been restarting their furnaces. But this is really not an easy and quick action. It takes several months to take the decision to reheat the furnaces and feed them with raw material. So it's really difficult as well. And sometimes you hear about accidents in the steel production. They often happen when such a restart fails. Often blast furnaces are restarted, but something happens, there are explosions, the quality is not working well, so the steel mills lose production again. It's not something you can switch on and off like other productions. Looking at the status today, in Europe, 50% of the capacity was idle last year in 2020, and there are still 10% idle. In the US, 40% roughly were idled, and there are still 15% not running today. And in Asia, from the 30%, almost 18% remain idle. So overall, if you exclude China, that is still different regarding the pandemic. 5% overall is disrupted outside China of steelmaking capacity. I think this picture shows very well what this means. So the blast furnace output is down 13% between January and September. Unfortunately, the results of October to December are not yet published. Europe, US, Japan, 20% down, India 14%. India, that is normally a regular exporter, they have not exported 1 single kilo for half a year. Korea is only 6% down. CIS is even up 2%, but they had very limited production capacity last year. So the picture is maybe giving a wrong impression because of what happened last year. Also, CIS in China is less relevant for Europe and the US because of the anti-dumping duties. I'm sure between October and December, we will see an improvement of these numbers, but it does not change the total picture. So the producers cannot cope with the demand. The steel that is requested from the contract customers, first place automotive when you look at flat steel, but also the other segments, is simply not available in full. So all contracts are being cut down and steel mills are distributing the volumes that they have available among the contracts that they have signed with their customers. And there are no additional availabilities for anyone else. And this is really a global effect we see all around. Import volumes have practically not existed since last summer. On the other side, on the steel demand, the forecast is that it will have dropped 2.4% in 2020. You might remember the production has dropped by 5% overall. And the reason is that the post-lockdown recovery in steel demand has recovered much more than earlier expected. Half a year ago, the producers should have decided what they produce now. In summer, the demand was far different from what it is today. China's strong recovery since February continues in machinery and automotive. Government stimulus have been put in place. There is a strong property market. In Europe, we do have a negative economic impact of the COVID-19, but there are strong social security schemes, fiscal stimulus that diminish the impact. The recovery is much stronger than it was expected. In automotive, construction, white goods, people have not traveled for business and for vacation, so they spend much more time at home and are willing to invest in household appliances. This is an effect that was very strong this year and not expected from anyone. And similar in the US, COVID has had a strong impact, but there have been measures to support, and all these industries have recovered much stronger and faster than expected. On next page, thank you. The raw materials, the costs have been increasing. Iron ore, as I said, the main ingredient for blast furnaces, it takes 1.6 tons to produce 1 metric ton of steel. And the price has increased from $65 early last year to $160 in December, and even more in January. So 250% increase in this year. There's a strong output practically all through the year of 2020 in China, and a very strong output since September roughly. So the prices are, of course, supported by that. Scrap, we still have 15% in blast furnaces that you need minimum to feed the blast furnace to cool down the temperature, and up to 100% in electric arc furnaces. We have reached multi-year highs in December. Of course, when steel is expensive, scrap is expensive too. It's linked to each other. Coal, you need 600 kilos of coal to produce 1 metric ton of steel via a blast furnace. It's limited, similar to other raw materials, and there is no relief expected also in the second quarter of next year. In consequences, the prices have increased dramatically. You see in this graph that we have prepared the price change from end of December, so from January 2019 basically until the end of last year, with a high change increase from August until December last year, dramatically. The capacities of all domestic mills remain very tight. The productions are close to 100% in the US. Prices increased by now. When I prepared last week, when I prepared the presentation, I wanted to say the coal prices in North America increased by 75%. This morning I put they increased by 100%, and now it's even more than that. If you ask me tomorrow, I don't know what the number will be. The lead times are long, and exactly the same basically in Europe. The prices have increased by 75%. We have very tight supply. It's difficult to find material, and in Europe, even though we have anti-dumping measures against China and Russia for cold rolled material, and 25% import duty if you exceed certain import volumes from other origins, similar to the US, we have always volumes coming in that have not been available the last year. On the other side, domestic producers only have material available for the contract partners. So that creates, of course, a scarcity in the market, because the people that normally imported material now need to try to find material from domestic suppliers that don't have anything available. Lead times are long. All mills are basically sold until May, June. And similar in China as well, prices increased by 75%. We have a strong demand in all sectors. Exports reduced significantly and support a global material shortage. Of course, we do not see a lot of Chinese material or any Chinese material and flat products in Europe and North America. But we do see that origin in Latin America and in the Far East, so that it has an impact. If there are no exports to, let's say, Singapore and Korea, Japan, then of course these origins on the other side export less to Europe and North America. And one more, just 1 second on the prices. One more comment that I would like to add that I believe is also very important for everyone in this call to understand. If you might see the indices that we all work on, these consider, of course, the prices for forward booking, for normal forward booking. So if you look at European indices of January, they show the prices that you would pay if you buy in January for normal delivery. That might be July. If you want to book now material for earlier lead time, because the demand is increasing, because you don't get all the material that you need for whatever issues, and there are a lot of issues, then you have to pay a different price that is $100, $200 higher. And that is the same in other regions as well. So the index shows you the price for normal forward booking. So on the last page, a quick outlook on the remaining or the full year of 2021. What do we expect? We believe that regarding the demand, the steel supply in Europe and North America will remain tight in the first half of the year, certainly, because automotive demand will boost the steel demand specifically for flat products, and other segments are strong and will remain strong as well. The supply side will improve somewhat, but the producers are reluctant to increase the production too fast, and it takes time, as I explained. You cannot switch the blast furnace on and off. You can do it, but it's a process that takes 4 to 6 months, and it's difficult, and you want to be sure that it is the right decision. There is still a lot of uncertainty regarding COVID, regarding the pandemic, whether demand will remain as it is, whether people are trying to build stocks, which I believe is very difficult to do. But of course, the producers want to, at any time, avoid a huge overproduction and dramatic losses that they had still a little more than a year ago, and for many years already. So therefore, delivery times will remain extended. The market will remain with very low stock levels. Raw materials will remain high because of the demand, and that will still support the further upward pressure on the prices, probably for the first half of 2021. In the second half of the year, we might see a downward trend, but probably the availability of material, especially with increasing prices, will improve, not only from the domestic suppliers that are increasing the production, but also import material that might be more available with high price levels. Let me end with a positive outlook. Yes, I believe that prices will drop eventually, but I do not believe that it is very likely that we will face these huge drops of prices like the ones we had back in 2009, simply for the reason that there are no excess inventories. There are basically no inventories at all, so everybody is really living hand to mouth from the volumes they get that they need and consume immediately. And same as Greif, we do our best to secure the volumes we need to fulfill all our customer orders. And we need your best possible forecast to be successful.
Thank you, Christina. Thank you for the very detailed information. So we move now on the resin market. Gianluca, please.
Yeah, thank you, Philippe. Yeah, morning, evening, everyone. Thank you for our customers to be here. Well, I mean, I will try to give a little bit of flavor about HDPE, so where it's coming from and where it's mostly used on global scale. As you can see in this chart, basically the HDPE value chain is starting from two main basic sources, natural gas and crude oil, that through a fractionation or a distillation process is giving us the most common feedstocks that are ethane and naphtha. Typically, countries like US or region like Middle East, they're producing starting from ethane. Other regions or countries like in Asia or like Europe, they're producing starting from naphtha, so from heavy feedstocks, let's say. So both through another process that is basically called steam cracking are giving the very well-known monomers, ethylene or propylene. It's interesting to know that, I mean, the typical output from ethylene is much higher with the ethane. That's also the reason why we saw a lot of recent, I would say in the last 3 years, capacity addition for polyethylene in US, for example, than polypropylene. And from this monomer, from ethylene, we have our polyethylene. Please, the next slide. So in this chart, you can see where we use HDPE. If we look at the polymers on global scale, HDPE is, certainly the king of the polymer, let's call it like this, because it's really the most used on a global scale. The most important applications are film, are blow molding, like in our sector, but also injection molding. It's extremely important, together with the pipe and conduct that is basically related to construction. Then film, it's mainly used in packaging through different downstream sectors: food, agriculture, non-woven. Blow molding, on the other side, is driven by drinks, bottled water, households, personal care products. In the last months, due to COVID-19, hand sanitizer, personal care product really gave a strong support to the HDPE demand and pushing up the consumption of this polymer. Let's have a look to the top polyethylene supplier. Here we talk about polyethylene, considering also LDPE and LLDPE. The global supply of polyethylene related to 2019 was in the range of 110 million metric tons. The top three players with pretty similar annual capacity are SABIC, based in Middle East, then ExxonMobil and Dow, that are based in US, even if obviously they have a global footprint. And then we have the Chinese suppliers like Sinopec, PetroChina, and again Borealis or Basel and Braskem. So they are basically the top 10. Everyone is, let's say, differentiated not only on polyethylene, but even on polypropylene, on even specialties. HDPE, as I wrote here, is accounting for, a little bit less than 50% of the global polyethylene consumption. So let's have a look to the main market drivers. The 2020 that is just ended was, quite a unique year, let's say, because we saw a strong feedstock price increase. As we know, also recently the oil is in the range of $55 per barrel, and it's basically at the 1-year high level. And there was certainly, and there is still a tight supply demand that had a shift in September, because, as I said, the COVID-19 also gave a strong support to this. Because it's, thanks to the COVID-19, there was higher consumption for several applications, not only hand sanitizer. We'll see also in the next slide. And what is interesting is that, this support gave to the COVID-19 was basically able to offset the decline that there was in the auto segment or in the construction segment. This was even more valid, for example, for polypropylene. Another interesting element was the severe shortage of empty containers that we had in Asia and in Middle East, that conditioned a little bit all the global trading. This commodity, HDPE, is highly intertraded. About 30% of the global HDPE volume is traded. It's intertraded between countries. So what's happening clearly in such important country like China, from a logistic aspect, is having immediately an impact on global scale. So prices went significantly up from a logistic point of view for this kind of trade pattern. But also, the lower interest rate that we are having created some speculative investment in commodities or in feedstocks that clearly also gave a support to further price increase. There was also a shortage of recycled resins in China that supported the usage and obviously also the price of virgin resins. And there was also a strong restocking activity in China because we had quite low price till May, June, that created also some speculative demand. And then we had from May onward a very strong price rally on global scale that is still ongoing in Europe or in Middle East. Next slide, please. So maybe this is, the most important driver related to this commodity situation, because there was an expected oversupply for polyethylene. I guess we heard talking about a lot of capacity coming on stream in the last years, especially from US. So everyone was expecting to see a better balanced market. But in reality, this didn't happen for multiple reasons. First of all, there has been several delays in many new operations that had to come online, especially in the US. There has been also quite tough hurricane season in US in August and September that created supply disruptions. And there had been, and still there are also several unplanned outages. So the combination of these elements with, as I said, a very strong demand support gave for COVID-19 created, a combination that was basically a very tight market since Q4 20 onwards. So this is, I guess, an important element to take into consideration. As you can see here in this table, I highlighted also where we are using where polymers are used related to COVID-19. As you can see, it's a quite wide panel of applications. It's related. We talk about gloves. We talk about packaging for e-commerce that really had a boom in the last months. We talk about packaging for medical suppliers, takeaways, containers, etc. So really, what's happened for the COVID, for the polymer demand was something I would say positive that gave a support. So next slide, please. So trying to look a little bit in the crystal ball, what we can say we expect to happen in 2021. The demand is expected to remain quite strong. And also from an economical point of view, the GDP on global scale, but specifically in countries like China, is expected to grow again at very high rate in the range of 7%, and the global GDP is expected to grow above 4%. This is very important because polymers are highly correlated to the GDP evolution. So if the GDP will increase consequently, also the polymers demand is expected to follow a similar trend. And recent market experts are, also expecting a chemical market rebound in the range of 4% in 2021, coming from the ACC. The consumer behavior that, as I said, gave a support to the demand is expected to remain quite similar also in 2021. And this, let's say, bullish phase is now having a break in Middle East and Asia, but it's still ongoing in US and in Europe. In US, we recently had a quite important price increase in December. Same situation in Europe in January, and is expected to happen again in Europe also in February. Also, the restocking activities are they will be, quite strong as well, because the GDP growth, as I said, is going to be well high, and also the US dollar that is expected to be depreciated also in 2021 and 2022 will create, liquidity in the market and in the commodity for, also speculative investment, and this also should support the prices. So let's say in a nutshell, we expect the market to be very tight till H1 2021, and then after, let's say, June, July, when all the new capacity coming on stream should be, let's say, more stable, we expect also some downward pressure on the prices. So this is a bit, my view, and I'm obviously happy to reply to some questions. Yeah.
Thank you very much, Gianluca. Thank you very much. So to conclude this webinar, so just an important reminder, our network, 265 facilities, 41 countries. So this is something which is also critical at the moment, because as much as we can, we are also activating some backup solutions between operations. So our network also plays a critical role at the moment. And so to initiate a bit the Q&A session, and I recall that you can put your question in the chat. So what can you do? One of the questions we got prior to the meeting, while you were, let's say, subscribing to the meeting, is what can you do, you customers, you buying packaging? So as you have understood from our different presenters, the situation is likely to continue, at least for sure for the next 6 months. And you have also, I think, understood that forecast is critical because of the very long lead time that we have specifically to order steel. So really what you can do to help yourself, to help us, is really to share your forecast as much as you can, as often as you can. This is absolutely critical. We know this is difficult. This is something which is, let's say, critical in every business. But the better the forecast you have, the better we can order and we can adapt to the situation. So this being said, let's move to the questions. So we have some few questions. The first one, Christina, will be for you. So I read as it is a question. So and this is a customer. So as if I understand, if it takes 6 months to produce the products, or the steel in this case, I suppose it was already known that we would face a shortage of raw material in beginning 2021. Is this correct?
Okay. Well, as I explained, the steel mills have reduced their output by up to 50%, mainly 40–50% in spring, and most of the volumes, the blast furnaces have been restarted between August, September, but they did not expect the demand to recover that much or that fast. So in August, September, they have realized that they need to restart more blast furnaces, but these volumes only start to come end of the year and partly in this quarter. So the reaction time is long. And the ability to forecast is as difficult for you as it is for us, as it is for the steel producers. They did not expect in summer that automotive would be that strong, or other industries.
Okay, thank you, Christina. Next question, Gaylor. So Gaylor is our, let's say, business leader for the Americas. So steel issue all seemed to come to a head in December. I did not hear anything prior to my orders, lead time going from 2 weeks up to 6 weeks. How was the communication missed?
Yeah, so thanks, Philippe, and thank you for the question. Really what happened in the Americas starting in that November timeframe, our normal steel lead time for the US is 7 to 8 weeks, right about that November timeline. And just as Christina discussed, the demand across the whole network increased dramatically. So our lead time for steel coils increased from 7 to 8 weeks to 13 to 14 weeks. And at the exact same time, the steel mills started to go late based off of the demand. So the reason the lead times extended, in your case from 2 weeks to 6 weeks was because it was a combination of the lead times going from 7 to 8 weeks to 13 to 14 weeks for cold rolled steel, and the fact that the steel mill started to go late to the tune of 5 to 6 weeks. So that got all caught up right in that November, December timeframe, which is the first time that we saw that up till that point in time, they were on time to their committed dates for steel coils.
Thank you, Gaylor. Another question I may ask to you, Roy. Roy is our sales leader for Europe, Middle East, and Africa. With this strong movement on resins and steel packaging, do you see customers moving to paper-based packaging where possible?
I mean, good afternoon, good morning, everyone. There's always the option for people to move to different types of packaging, but in terms of the industrial packaging and the products and the markets that we supply into, the demands on those products in terms of the packaging means that they're limited in terms of what can be moved into paper or card type packaging. The barrier properties, the rigidity required, the protection required, the UN certification required on certain products means that it's difficult to make that radical a change. Of course, there's a possibility it could happen, but in the main, the markets that we deal in and the end markets we're dealing with in terms of automotive and chemicals, base chemicals and so on, the requirement is there both from a safety, a structural and a delivery and logistics need that it needs to be in steel or resin-based materials. So there's probably limited options for most of the materials because most of it is of a liquid type. So essentially, there may be movements to some other types of rigid packaging, but the movement to paper is probably going to be quite limited.
Thank you very much. I don't know, Dave, if you, Dave Lords, our sales director from Americas, if you have also insight, as we do many fiber drums there.
Yeah. So the only thing that I would add to Roy's comments is the really circularity of some of the products, right? In fiber drums, from an end of life standpoint, it's very difficult to get those de-chimed and back to a source that can reuse those materials. It's much easier to do that with a plastic or steel industrial packaging product. So again, we've seen some migration over the last several years, but as this is a pandemic and we anticipate supply chains to level off, in the next 6 months, we anticipate due to the reasons that those customers are in those package types to pretty much stay in those areas.
Okay. Dave, as you get the floor, there is a question on a raw material we did not speak about, but perhaps you can say some few words. Can you touch on paper, linerboards, and fiberboard supply for your packaging, especially drums?
Yeah, we haven't seen the tightness, obviously, that we have in plastic and steel. There is a little bit of supply chain disruption in that area. We are vertically integrated as an organization, so that definitely helps us out with supply. But we don't anticipate to see any further disruption in that area.
Thank you. Thank you, Dave. Many questions, so I'm trying to read them all. So a question for you, Francesco. Where is that question? So does Greif have long-term contracts for both steel and PE to assure supply in North America?
I'll say globally, the logic on which we work is that we have contracts. We work on contracts because this is the best way to be safe and to deliver volumes. It's not only related to steel or let me say steel and resin, but I would say all the components that are critical for us, we work with contract. As I said at the beginning, the real issue is the ability to forecast, because there is a time that is needed between when we need the material and when the material needs to be ordered. That is the point. I mean, better we forecast. I insist on the fact of what Philippe said. If you want that we help you, you need to help us in giving forecast. Better is our forecast. Better we deliver to you. We have contract everywhere. That is what we permit to us, I would say, to have a supply chain that was smooth enough, let me say. That is, for me, the critical message.
Okay. Thank you, Francesco. Christina, two questions. I will put together two questions, or they are kind of partly related. Have the mills implemented allocation? And the second question is, how do you secure additional volumes than contracted volumes?
Okay. The first one, have the mills allocated allocations? Did I understand correctly?
The question is, have the mills implemented allocation?
Okay. Yes, the mills have, as I tried to explain, only contract partners are supplied at all, and everyone is getting allocations. It's not possible, in general, it's not possible to increase on a short lead time the volumes that you want to have because of the production time. And today, of course, it's even more difficult because of less availability. Our producers as well don't have the material and the raw material they want to have because of issues in logistics, because of Brexit issues with material not coming in, because of delays of all kinds of transportations for various regions. The second question was, how do we secure additional volumes, right?
Yes. Yes, absolutely.
Good question, thank you. So yes, when we realize that that we need additional volumes outside of our contracts, we go, of course, into the spot market, and that is also why I spoke about the pricing. So we have to go then to the spot market, to any producers, service centers that have volumes available on short lead time, but that is, of course, at a price. You have to either find material that is not in the size that you wanted, so you have to cut it back. It is at a totally different place. We also have to send a lot of material from one plant to the other. So there are a lot of additional costs that are burdened on us, because we have to either buy additional material, make it fit for purpose, or bring it to a place that was not planned.
Okay, thank you, Christina. There are also some few questions related to, let's say, refurbished packaging. So there are two, I don't know, perhaps Paddy Mulane, he's our business leader for EMEA. You can try to, let's say, to give your vision. So how do you see the secondary markets or refurbished packaging impact? Can it partially mitigate the pressure on steel? And we have another question, I'm trying to find it. Will there be a switch to recycled packaging to cope with the temporary shortage? So that's about the same question.
Okay, thank you, Philippe. Good afternoon, good evening. Yeah, both are very much linked. The issues that we're seeing through the COVID pandemic has taken a lot of supply out of the recycled market as well. So if we talk about IBCs, the availability of IBCs for rework and recycling has been drastically reduced, and that has a knock-on effect on our markets. So contributing to the shortage for new products, yeah, it's limited, unfortunately. As it relates to steel, it is also directly affected by the availability of steel in the market. There may be a lag between new going to recycled steel drums, but yeah, the volumes are in no way able to compensate. That's a much smaller market. Availability is tight, and as Christina mentioned, the price of recycled products also increases in line with the price of new products. So, and then the second question in terms of moving over to recycled, if I can ask you to repeat that, Philippe. Second question.
Yeah, well, it was about the same. I think you already answered it basically with what you have said, Paddy. Thank you.
Yeah. Thanks very much. Thanks.
Thank you very much. A question which is the one, I don't know who can try to answer that one. Considering the current movement to deplastify the planet, when do you estimate consumer behavior may affect HDPE consumption? So I don't know, Gianluca, is from your suppliers, if you got insights that you can share on this one, or not?
Well,
not an easy question.
I guess I mean, sustainability is certainly a prevailing trend right now, and is expected to remain extremely important for the years to come. So what I can confirm is that the demand for recycled polymers, talking about polyethylene, for example, is expected to double over the next 8-10 years. So the trend is there. When it's a bit difficult to reply, but I mean, the trend is very clear.
Okay, thank you. Let's say there are, well, another question that I think you mentioned it, Francesco, which is more of a general question. What are the drivers of the automotive demand?
The drivers is for the automotive is clear. The government, I would say, support in terms of funding. That is what drive today really the automotive demand. I would say that is simple. I would say, and the situation is that is not a market that is very stable. Clearly, it's linked to the consumer behavior. Situation is that the driver is very simple. The government proposed to give some funding for buying cars, and this impact directly the volumes, I would say.
Okay, thank you, Francesco. So there are some, let's say, other questions. We won't have time to answer them all. What we will do, as we always do, we will address those specific questions, let's say, via your usual account manager or via our presenters today. So we are sorry, but too many questions came, so we cannot answer them all. We want to just tell you that we will continue, of course, our webinars, Discover Greif. So we will continue our usual series of webinars. We will add also tech talks. But the next webinar, it will be about industrial packaging for food products. So that will be mid-February. As usual, you will receive an email so that you can register on that webinar. So you have been more than 250 customers or partners to be on this webinar today. We thank you. We hope that, let's say, it has been very informative and insightful for you. And we wish you a good end of the day, or a good end of the day, let's say. Bye-bye. Bye-bye, everyone, and thank you.
Bye-bye.